they are a NFT loan company, and recently they made some headlines with the loan for two Mega Mutants for 1,000 ETH that was used to buy Machi's Mega Mutants. So one person picked up three Mega Mutants. Jessica, who is in the audience, there's a picture of her. She has blonde hair and her back is like facing you. Was the one that put this together. She's a friend. I see she's listening. So, Jessica, thank you for setting that up. Hopefully, Gabe shows up and we'll have a great chat. But I think it's a really interesting thing to talk about, especially in down markets, to take a look at who should be taking out loans, who shouldn't. My general take is for the most part, retail should stay away from any type of leverage. That being said, at the higher end, more institutional level, there's a lot of tax advantages that can coincide with putting out a loan rather than selling an asset. I also think that there's layers of liquidity where liquidity management is probably one of the biggest leaks that I see in most professional investors' games that are professional but managing their own capital. Like it's always a little bit of a challenge to try to manage the back and forth of, all right, you have to pay rent, or you want to buy another house, or you want to buy a car, or XYZ. And that same pool of money is also the pool of money that you're using to invest. I watch this a lot with like poker. As a poker player, you got to do bankroll management. It's like kind of poker 101. You got to be able to weather a storm. And most poker players actually end up going bankrupt at some point in their career because it is so challenging to efficiently do bankroll management. Also, I'm a big proponent of outside capital. If you can run outside capital, you can be a little more emotionless about it. But kind of an interesting week in NFTs this week. One of the things that I'm looking at and that I'm seeing is not sure if anyone had the chance to read the Substack, but this week I went through and did a pretty deep dive into what is going on with Yuga Labs Yuga Labs. And the results of what I found, I would describe at best as like a mixed bag. So before I kind of go any further, if you haven't read the article that's pinned to the top, I highly suggest that you read it. One, because I want you to subscribe to my newsletter. I'm selfish and I want things for myself, but for the purposes of the conversation here, I put a lot of work into this and went through kind of like SEC filings to look at who the board of directors are. The big takeaway that I took from looking at the company is you have an early stage company that is under 100 employees, most likely. And that should be a fairly clean and clear corporate structure. But instead of being a clear and clean corporate structure, what I found, and I could be inaccurate, but I found that you have Nicole, who's the CEO, but she may not really be the CEO because she kind of is the CEO. But then on LinkedIn, it says that she's a full stack executive, which might lead me to believe that she's not really going to be the CEO in the near future, or that she may not even be the CEO today. You have two presidents, two co-presidents. Normally, you might have one president and one CEO. You also have a chief operating officer. There's, to my knowledge, not typically a ton of difference between a chief operating officer and a president in a company. Both have very, very similar roles. So you've got a CEO who's in charge. You've got four founders. You have a CTO who's one of the four founders, but I don't believe the CTO is actually responsible for building out the tech stack that's necessary for the product. So the person that's responsible for that, I think, is Herman, who runs improbable.io. And that's the company that's building out the gaming system for Otherside. The reason I go into this is there's a lot of people that are very, very, very bullish on Yuga. And to be fully clear and like full disclosure, the fact that I own a lot of Yuga land, doesn't make me immune to objectively reevaluating my position on a day-to-day or week-to-week basis. When I'm looking at these things, what I'm seeing really is that we are at this place where people kind of want to feel like the money going into this company is going to solidify it to being a real player, and that they're going to develop a game that becomes the center of the NFT ecosystem and really the future of how we interact online with Web3. What I'm seeing instead is something just a little bit different. I'm seeing that they are piecing this together, but it's not all internal under one umbrella, which when you have layers of complexity on top of things, the likelihood of success becomes lower. And I think it's really relevant to say, like, well, fuck you, Josh. Like, what do you know about any of this? Why do you think you should be able to, give your opinion on this when there are so many really fancy people with, big funds and the best in the world? And the answer is I have some limited experience with it. I built a very small company and was able to exit that. That wasn't that many people. I was recruited by a venture capital firm to help turn around a very small fuel additive oil technology company in Houston. My role there was really the VC firm had put, I want to say, like 50 million into the company, and they wanted to get it off their books. And I was brought in as, part of a turnaround team by the VC firm to, rebrand the company and get it kind of sold and off the books. And we were successful in getting it off the books, but there was a lot of, there were a lot of things that caused the company to struggle. And I'm not trying to speak badly on the company that I worked on behalf of, but I learned a lot there about how small inefficiencies in corporate structure can lead to bigger issues down the line. And typically, those issues take time to play out. It's not like a bad corporate structure plays out over 3 days or 3 weeks. This is more something of a year or two goes by and it becomes a little bit more challenging. Um, Going kind of one step beyond that, my next role was I raised about $7 million and built a co-working space in New York City. So the reason I talk about these things isn't to say like I'm great or I know everything, because absolutely I'm wrong a lot. But I do have kind of 3 stages of experience. I've been involved in a bootstrap company and scaled it to like a very small exit. I've been involved in a company that I think had about like Series C financing. It was an older company, and it kind of helped turn that around to see like and get it off the VC's book. So I kind of have an understanding of what it looks like when a corporate structure doesn't go in a perfect direction. And then I've got my own experience where, like, I built a co-working space in New York. Inc. magazine named us top startups of 2018. And then I think we were worth about 40 million. And then COVID hit and I went bankrupt. So failed entrepreneur on that one. And that's like an L in my category. So however you want to look at it, you can say, hey, that's a failure or success. But the reason I'm giving you my 30-second resume is much more just to say that I look at business a lot. I've got like 20 years experience here, and this gives me pause or question. It doesn't mean that I'm right. It doesn't mean this is like, oh my God, you guys going to blow up and burn in it like any second now. But it does mean that I think people should at least be aware of what's going on. My opinion is that any really mega successful company that I've seen has one or maybe one or two very strong leaders that have like these insanely big visions that they just go after. And those leaders have like a layer of what you would call like almost reality distortion, which was often attributed to Steve Jobs, where you almost need this like hyper charismatic leader to convince you to believe that you can do unbelievable things, and that's truly how unbelievable things get built. So maybe Nicole is that person, right? Like I have no idea behind the scenes. I know she's not super active on Twitter, I watched her in an interview, which is in the post that I made, and I'm really impressed by her. She seems very intelligent. She is very thoughtful. She does great in an interview. Like that interview with her was actually what made me decide to buy the other side land because I thought she was really impressive. That being said, I don't see her active with the public, and I see Gordon is active with the public. So he's one of the two co-presidents, but like I think it's Gordon and Garga are pretty active on the road show of going on podcasts and things of that nature, and they're the founders. Nicole seems a little bit more quiet and behind the scenes, which is okay, but I just don't know kind of like whose vision is being catapulted forward and how that vision is being conveyed. So to me, like I look at the big companies, Uber, led by Travis Kalanick, very strong CEO. Tesla, originally founded by two other people, not founded by Elon Musk, took over by Elon. Went from main investor to CEO. Now Elon runs Tesla, Steve Jobs, Apple, Walt Disney, right? Like, so to me, as an investor, I always look at who is the leadership because companies aren't these like amalgamation of technology and physical assets. I think tech companies are much more an amalgamation of people. And so to me, I'm just trying to understand how that works. And what piqued my interest on this initially was the 7-person council that was put together by Board Ape. And the reason why this piqued my interest is I was like, okay, like you pick 7 people, uh, basically kind of a focus group, maybe paid, maybe unpaid. Well, how does that relate to your corporate structure? Like, is it just a focus group? Is this a group with governance? And so I started doing as much research as I could. And candidly, I didn't find any great answers. So that's kind of the long and the short of it. That's what I'm looking at so far early this week. I probably missed a lot of kind of interesting recap as far as what's going on. Projects that are doing well. We obviously have the Azuki video that came out. For anyone who wasn't paying attention to that, again, back to Bored Apes, they put a coda in the video, but it's not a coda. Or maybe it's a coda, or maybe it's not a coda. But like, they definitely created a creature that looks almost identical to what a coda looks like and put that in the video of like the pets that you could get along with the shark. So Azuki's been doing really, really well. And then
Sorry, Josh. It's Clonex you're thinking of.
oh yeah, sorry. You know what? Thank you for
I'm
saying
looking at
that.
this video. I'm like, what? Do they have something coming out too? This
Sorry,
is too much.
sorry. I take back everything I said. It's all been Clonex. You know what it is? I was thinking of Clonex by Murakami, and for whatever reason, Murakami and Azuki in my head were kind of getting cross-referenced. So yeah, so it's Clonex that is doing this, and someone even like made a joke, which I appreciated, which is like, this looks exactly like a Coda, but it's not. And then they're like, yeah, like they don't call this Clonex for nothing. Like, like they clone the Coda. So anyways, those are kind of some of the things that I'm seeing this week, but I'd love to hear from Blake and Kayla as to what they're seeing.
Yeah, I'm definitely. This is like, and I'm kind of upset at you, Josh. This is the one week I didn't read your blog coming into the space, and it sounds like it's the one I should have. But I definitely look forward to checking that out. Um, to be honest with you, I'm not too like, and maybe I will be after reading. I'm not too like overly involved into like the hierarchy of Yuga. One thing, and I don't know if you covered this at all in your Substack, is like, what is the other side? Like, I understand like it's maybe more of a platform and less of a game, but the one thing that's so confusing to me is like, like, is the improbable team like, are they like 50-50 on the other side? Is it just a partnership? Um, it sounds like other side isn't exclusive to Yuga. Like they'll be bringing other companies. Like I'm just, like, I don't know if I'm just not seeing it or if they're like 20 steps ahead of me and I'm still like lagging behind. Like, hey, what's a coda? Like I have no idea. But it just seems like there's like a lot of moving pieces that hopefully they all have coming together. That I'm just kind of floating around in the abyss. Just have no idea what's going on.
Yeah. So here's kind of my understanding. The other side, there's functionally 3 to 4 business models that Yuga owns, right? So Yuga owns one line of business, which is Bored Ape Yacht Club. There's uh, very closely tied to this line. Sorry, I gotta put my do not disturb on. Let's see here. Okay, there we go. So you have one line of business, which is Bored Ape Yacht Club. Under that line of business, you have mutant apes and dogs, right? So that's one line of business that you have. Although I will say, I think that Bored Apes and mutant apes are technically 2 separate lines of business. They're very, very closely tied together. The next line of business that you have is Punks and Meebits. And that line of business was acquired with the funding. And then the third line of business that they have is the other side. Now, here's the rub. The first 2 lines of business are kind of what the brand is known for with their execution or rewarding holders. The last line of business comes in other side after the funding came on board, which technically Punks did too, but Punks have a track record and you're not really doing anything. You're just taking ownership and maybe giving out some commercial rights. So, anyways, that being said, I think that from my perspective, the other side is this quagmire and question mark of, you've got these supposed 12 missions from an obelisk, right? And we're 6 months in and we have 1 mission out of 12. So just really quick math. If we keep this pace, that means that in 6 years we'll have a playable game right? So that's not necessarily an optimal timeline. When you look at the details on the execution with this, there's a lot of missteps, right? So the first misstep was the mint. They burned $100 million in funding. Another misstep is they're a little bit haphazard with security and rewards for people. So if you wanted to have the obelisk uh, checked off on your other deeds, you had to have connected a wallet with all of your other deeds. That's kind of an issue. I mean, that, as a best practices, if you held $5 million in other deeds, even if there's just a 1% chance that it goes sideways, like I wouldn't recommend connecting all $5 million worth of your other deeds just in case you hit the wrong button. Like it's just kind of like a basic security thing. So that I don't think was great. Gordon did mention that you would get a second chance if you had these on multiple wallets to do another first voyage and get that checked off, but that got written but not acted upon. So kind of what I'm looking at is I'm putting on a pessimistic hat on and saying like, where are holes that I can poke in this? Because that's one of the things that I think I do fairly competently is look at objectively, like, okay, like what have they done really well? Well, marketing great, branding great. Once this thing launched and they took in that whatever it was, 100 and some million in funding, I feel like the pacing, the energy, very, very different. Very slow. There have been no tweets from other side, with the exception of like I think there's one video that came out. But like one of the things that contrasts I've been talking a lot about is Wolf Game Land versus Other Side Land. And Wolf Game is like they both have no game, right? But Wolf Game is drip feeding like information. They've got these little gifs that or gifs that come out like once a week or something like that. So these are all things that uh, that happen, and I just don't see the other side putting any effort into that. So what does this say to me as an other side holder? It says you got like one of 2 options. One, they're building out some enormous announcement that's going to blow our minds and like, holy fuck, this is just going to be insane. If that's the case, every day that goes by, in my head, the bar for what that announcement needs to be is a little bit higher. Because if they make an enormous announcement that they've partnered with Apple, and Apple and Other Side are going to be co-branding this together, and now Apple owns half of Other Side, that'd be like the best announcement I can imagine. If that comes out in 15 years, well, that's too late. I mean, like if it comes out in 5 years, well, that's probably too late. Right? Like, so you're just like setting the bar higher and higher when you could really just do a drip feed with it. Any other thoughts you're thinking this week? And then I'll kind of pass to Kayla. I'd love to hear what she's thinking.
Yeah, I mean, just kind of. I mean, I have a few thoughts. We'll get to them through the show, I guess. But one thing I'm kind of thinking, I'm wondering if you agree with this point or not, is the mint price for other side was what, like 2.5 ETH for two plots in gas, or let's call it 1.5 ETH or 2 ETH, and then the huge run up in ApeCoin price. Do you think there's any possibility that I don't think they were oblivious to that Yuga was oblivious to the demand, but do you think there's any way that it kind of like just kind of spiraled out of control to where people were paying. I mean, I don't even have the figure in my head, but let's say it was 4 or 5 ETH per plot. Do you think they kind of got in too deep and that price action was just too crazy, and the demand or the expectations are set too high because of the mint price?
I think they didn't care, right? Like, I think if the 100 million plus in gas fees that got burned, um, if those had been coming out of their pocket, I don't think they would have been done. Right. Like, I think that this was such an easy workaround that might have taken an extra day to be like, there was no one in the world, especially this team, that didn't think they were going to have this level of interest and momentum. Hey, keep in mind, when this came out, Moonbirds had dropped and everyone was like on edge. Hey, I remember holding a bag of Moonbirds and be like, oh, fuck. Like, I got to be really careful. Carson just left. And if other side drops, these are going to plummet. Like, I mean, like, I just remember thinking that. And everyone every day was like, man, when's the other side going to drop? Like, there was no way that you couldn't incorporate what level of demand there was. And the reason I kind of doubled down on this is I listened to the tone of writing when it comes to what they put as their apology, which wasn't an apology, which was, whoops, we broke Ethereum. Sounds like we need to make a new NFT or a new chain to work on. Um, that just has no sensitivity to the investors whose money you just burned. Right? Like, so to me, like, at some level, you have to question, like, all right, like, to me, I'm kind of looking at that in retrospective. All right, that's how they think of investor money. Like, not their money, not their problem. If you wanted to mint, cool. If you didn't, cool. But they got paid and some money was lost, and that is what it is, right? Like, I've never seen or heard anyone from the other side be like, oh man, we really messed up. We would never let that happen again. It was just like, whoops, no big deal. Like, your money, right? Like, that's my take on it. So, anyways, Kayla, what are your thoughts for the week?
Yeah, hey guys, GM. I think just kind of tying in, I did get to read your Substack, Josh, and yeah, I think that the corporate structure over at Yuga is interesting. I did see and listen to a space earlier this week with their new council, which just adds another level and layer of um oversight or organization. From what I was reading, it sounds like the idea. I'm not quite sure what the motivation was for putting the council together. It sounds like a great idea. It sounds like everybody in the community is pretty pumped about it. Um, I did get to hear from one of their council members, and obviously it's very hush hush as to what exactly it all is supposed to be. But the idea, I think, is that they just wanted to have different, I guess you could say, like ambassadors that represent different segments of the community and um, who could help just help Yuga. I guess what we're talking about, Yuga's like exec team, um, just kind of have like a better pulse of what's going on within and throughout the community.
So
Um,
here's one of the things that I'm looking at with this. I look at who
mhm.
the council is. Every person on the council incredibly supportive of Board Ape Yacht Club. I'm not familiar with any person on that council that has said anything objectively critical about the brand, which I think is great if you're just looking for brand ambassadors and people to go out and say, "Wag me," and we're going to the moon, and everything Yuga does is perfect. But if I'm a company, like, I want to at least have one person that not mean or FUD or hate, but like that is objectively looking at things and saying, "Wow, like why are you doing thing one? Why are you doing thing two?" Because to me, like the if you want ambassadors that are just promoting your brand, I think that that's the right move. You pick up ambassadors that are promoting your brand. But if you truly want a council to help pick up where you have blind spots, I would have picked at least one person who's like controversial or says things that might make people question how they think about things. What are your thoughts on that?
Yeah, no, I agree. I agree. But I think, who is chosen kind of also, it sounded like there was a lot of conversation around, we're glad that this wasn't like voted because it would have just been like a popularity contest. And so I will say that I think that from the perspective of the community, from the spaces that I was listening to, it sounds like they had a couple folks who just are kind of smaller and not the biggest holders, and things like that within the community. So it sounded like um they knew that if they put it to a vote that they would have just been in like this even bigger echo chamber, um, but wanted to try to involve folks who might not be as big of a presence or as big of a brand within the community. But I think to your point, Josh, I mean, like I don't know how many people who are, um, you know, and it sounds like this is specifically for apes. This is not like something for the entire Yuga Labs ecosystem. Is that right? This is specifically for apes.
Yeah, well, I mean, this is for Bored Apes, but it's a little challenging to me to try to say like these are wildly separate entities. And like I know like legally like Ape DAO is supposed to be very separate from Bored Apes from a legal perspective, but like operationally, when you go in and like go through their EIP process and like go into deep dives, one of the biggest keys to whether something is respected or not is this person a member of the ape community? How long have they been a member? What has been their contributions online or whatever? So like, yes, theoretically this is only supposed to be for Bored Apes, but like, if you have the exact same leadership team, if you're sitting in a room with Nicole and Guy and Gordon and Garga, it's hard for me to imagine there's this like great divide of like, okay, we're not going to talk anything about other side, but maybe it is, maybe, but yes, it's deemed as just the ape council. But my thoughts is in practice, these companies are very, very closely tied together in practice, even if in a legal or capitalization table they're very separate. Like operationally and practically, they're very close together.
100%. Yeah, no, that makes sense. Yeah, so I think, yeah, in order to, I don't know how many ape holders. There was one guy, I think it was like um, Ape Father 3 or something like that. I can't remember their exact handle, but seemed to be like to have a pretty like uh, critical, and not like in a negative way, but just thoughtful might be a different word to use, approach to, hey, I'm not sure I agree with X, Y, and Z that, Yuga has decided to do. Or even I was impressed actually. They were even, I think, somewhat critical of even just the community and where the community had gone. So I think like people like that would be great. I hope, I don't know. I didn't do any deep dive on all the different members of the community or the council, but I do hope that um, it at the very least helps to align incentives and gives voice to the community in a different in an additional way outside of just the DAO itself. But yeah, I think that that's interesting. I feel like just wait for all the other councils that start popping up because once Yuga does something, everybody else starts
Yeah.
doing it. So
No, I think you're right. I mean, I think to me, and I do see Gabe just stepped up on stage, so very excited to have him as a special guest today. But yeah, like it's a very weird vibe of when you pick 7 people out of, call it, like 10,000 people that hold apes and mutants. You're kind of saying like this is the cool kids club, unless you put out like an open application for it. But at the end of the day, like you create some social in-group, out-group dynamics, and it's something to be aware of. Like it's something you're gonna have to manage. Like I don't like truthfully, I think the special counsel or whatever, or no, the special counsel is on ApeCoin DAO, and that's like Alex Ohanian and Amy Wu and Yatsu are on that. But the council of Bored Apes with Josh Ong and Laura and a few others, that one is a bit more ambiguous what they do. But going on to, I really appreciate your insight on this, Kayla. I think that's a really good thing to think about. I talk with Ape Father a lot. He and I disagree on a lot of stuff, but I respect him as a good thinker. And I respect that he has opinions that he's open to voicing. I think it's a wildly underappreciated skill set to have people that are willing to speak out, that care about a brand, but care about a brand enough to put their personal reputation kind of in the crosshairs to address a real issue with a brand. All that being said, Gabe is up on stage. Gabe, you just did the deal for Machi's mutant for 1,002 Mega Mutants, gets 1,000 ETH, and then used to purchase. Before we spoke earlier this week, I thought that was like an inside deal, but you told me it wasn't. It was like a straight above the book. Whoever took the loan out, they're paying interest. How are you doing, man?
Hey Josh, yeah, good to be here. Thanks for having me on. Hey everyone. Yeah, the Mega Mutant loan was really cool to see and exciting. I woke up one morning and I saw the megas on the DApp on the application, and a couple minutes later there was 1,000 ETH bid that popped up on the DApp too. So it was a completely organic loan. Cool to see that type of size getting through and kind of these market conditions.
Yeah, it's crazy to see. I personally wouldn't have put that loan out. I mean, I'm one data point, but it feels like what would you say the loan to value ratio is on that? Like, where do you price a Mega Mutant today? Like, to me, in the simplest sense, if you're buying a new Mega Mutant for 1,000 ETH, it's a 50% loan to value ratio, which in my head for a risk on asset within a risk on asset class, like I'd want to be doing like 20% loan to value ratio. What are your thoughts on that one?
Yeah, I think for this one, it was such a big and complex deal that it looks like they valued the megas, the 2 megas that were used as collateral. Looks like they valued them at 1,000 ETH, so the loan is 50 LTV. And then he obviously bought the third one for 1,000 ETH. So I think with assets that are like this rarity and when you have lenders that are actually bullish on the collateral that they're lending against, so that in a default they don't mind, picking up the asset. So these lenders obviously are bullish on the mutant community and the mutant assets, especially the megas, of course. So yeah, I think it just depends on kind of your counterparties and how the market is.
No, I think that makes a lot of sense. One of the things that I think about, and I know you weren't here at the intro, but my general perspective is that retail investors, if you're like your average investor, I'm a big proponent of staying away from leverage. But at the same time, I also think that for the institutional players, the long term buy and holders, and those type of people that want to have some levels of liquidity without a tax consequence. And to educate the audience really quick for US audience, if if you have a NFT and you paid 1 Ethereum for it, and it's currently worth 1,000 Ethereum. If you take out a loan on it, you don't have to pay taxes on that loan. There's no trigger for tax consequences. But if you happen to sell that for 1,000 ETH, you have a 999 ETH tax liability, which would be taxed if it's under a year at a normalized gain, which might be like 50 some percent, depending on where you are, or if it's a long-term capital gain, a lower rate, which is probably more like 20%. Although some might make an argument that NFTs are in the art class of tax level, which might be 28%. The reason I say this is you can keep holding the asset, have a level of liquidity, and also benefit yourself. But you have to be really, really careful, because if you don't have the capital to repay this, a lot of times these loans get liquidated. Gabe, what's kind of your thoughts as far as like responsible lending? What caveats do you think the audience should know about, like when you think they should take a loan out versus when they shouldn't?
Sure. Yeah. So, I mean, I think I've been in the lending space for almost 10 years now, first in actual pawn shops, like lending against Rolexes and diamonds, and then lending out crypto at BitGo on the institutional side, and then now NFTs, collateralizing NFTs. So I think today, most of the value is sitting in the hands of more sophisticated holders, so like traders, guys that can arb rates across DeFi, someone that's hedging their downside risk with these loans. So I'd say the market is a little bit more sophisticated, and those that are levering up today are guys like high net worth individuals, traders, DAOs that are just using the money more capital efficiently. So it's not really a retail's game, and I wouldn't say I'm a fan of like retail just levering up and having cascading liquidations, kind of like we saw with BendDAO lending protocol, because they have a peer-to-pool model. But I think that there's different types of use cases, especially in this market. You have people that are users that are taking the money out of crypto and into real life for different types of use cases. So it's not only just about levering up, it's about creating infrastructure that enables this liquidity, because liquidity is good in any sort of market and economy.
So one of the things that I've been thinking about a lot, have you ever thought there might be an NFT collection that would maybe go through you or white label yours or some other product, where like the collection internally would collateralize its assets? So said in a more easy understand way, I build a collection. The floor price is 10 ETH. As the collection itself, I say anyone that wants a loan for 2 ETH on any of these, you press a button and get it for the entire collection. Do you think that we'll see some layers of play like that as the NFT ecosystem evolves more? Or do you think that we're still pretty far off from something like like a collection loan offer?
So I mean, I think I understand your question. We actually support collection-wide loan offers. So as a lender, you could go in and say, on this collection, I want to lend across the board, 10 ETH at these terms. So we do have collection offers. Is that the question?
Yeah, but my question would more be if the collection loan offer could be done by the brand itself, right? So Bored Ape Yacht Club comes out, the floor is whatever, it's 80 ETH or whatever the floor is for apes today. They say any ape that wants a loan, our interest rate is 18%, and we'll give you a 25% loan to value ratio. We're betting on our own brand. And by doing this, they keep that almost into perpetuity. You'd obviously need a somewhat well-heeled, the well-heeled organization. But do you think you'll ever see that as kind of part of the value proposition of like these collections, that they'll want to start providing like liquidity into perpetuity for the holders of their NFTs?
Yeah, I think it's an interesting question. I do think that we're going to see more like native team stuff like that, where or communities are providing that sort of financing for their holders. It makes sense. I think it does. We're already starting to see that happen. Like Squiggle DAO, I think, is making loans on a lot of squiggles in the market. What's missing is they need the infrastructure piece. So that's why, when I think of Arcade, it's like we're building a protocol. It's also a product, but it's also a protocol. We want to get plugged into the rest of the ecosystem and be this Lego. So So yeah, I think that it's a couple things. We want to be this Lego where different projects are building on top of our protocol. At the same time that there's a product that we're trying to build and has a consumer facing, application.
That makes a lot of sense. I mean, I think there's a few things that I look at. So for everyone in the audience, like one of the things that's one of the principal drivers for your primary residence is actually how loans work, right? Like if we had to pay all cash for homes, the prices of homes in your average city, your average neighborhood outside of like the major metropolitans where you have incredibly deep pocketed individuals would probably be down like 40 to 50% from what it is, if not more. Leverage plays this enormous role behind the scenes that like people really, if you take time to think about it, don't understand the importance. And this is actually why I wanted to have Gabe on the show today. Well, one was Jessica said I should have him on the show, and I respect her opinion. But two, at a bigger level, the reason I want to have Gabe on the show is to take a look at how we think about the value proposition of NFTs, but cross-reference that with how we think about value proposition on other assets. So not necessarily an asset, but the price of college education is almost completely depicted by this crazy loan structure where you can get a loan for like $100,000 or more on your college education, depending on where you're going. But it's a loan that you can never default on. So, in my opinion, the reason why education prices have drastically outpaced inflation, while the thing that you get, which is the education, you can get online for free, is simply a product of like unlimited loans from the government. So whenever you're thinking about any asset class, whether it's like education, whether it's automobiles, whether it is your primary home, whether it is the office building that you're stepping into, all of the prices for almost every mature market are at some level depicted by loan access, by interest rates like LIBOR or whatever you're going to say. And when you look throughout history, one of the most interesting things is the strength of any currency of any country is almost directly tied to the way in which that country has allowed private ownership of land and the provenance of land to go from one holder to another, and then the ability to get loans on that land. Because for your most part, your average person, an enormous portion of their net worth is tied up in their primary domicile. And if you have a home that's worth $1 million, but you had no way to get a loan on that, even if you had paid the entire thing off, it would be a very illiquid asset. But by being able to get a loan on your primary residence, you could build an addition on your home. You could take a family vacation. You could go on a cocaine bender in Vegas. You could do a lot of things with that money that could help stimulate the economy in different ways. And so I'm curious how you think about the future of lending, Gabe, because I obviously see this as kind of one of those unsexy behind the scene things that is probably going to play an asymmetrically large role, and most people don't even realize it's happening. So curious as to what your perspective on the future is, like what you think is going to be coming in the next year or multiple years.
Yeah, so I think you're right. Lending on, is sort of the backbone of a lot of new capital markets, and that's the way I've always seen it. Is like it is a new asset class, but it's an asset class that can cover and capture value in many different sectors. I think we're first seeing it in like art and collectibles, uh, online communities gathering, sort of like digital country clubs. Um, so I think we're seeing the space mature a bit, and we're seeing loan volumes kind of creep up as even trading volumes are going down. So I think the lending market in the next couple of years looks a little bit similar like it does now. It's a little bit more sophisticated with more institutional involvement, institutional lenders wanting to get access to this sort of new fixed term yield in DeFi, which is actually real yield. There's no token subsidy. It's just product market fit with users wanting to collateralize their holdings. So I think it stays sort of that, and because it's on ETH1, I think it stays sort of that kind of whale game for now with just catering to the high value assets where the actual value is in NFTs. But I think over the years, as more participants and users have Web3 wallets and are comfortable interacting with NFTs become synonymous with the internet at some point. But I think eventually, it becomes, these protocols become two things. They become, protocols with backends into many different legs in the ecosystem. But also the successful ones will have successful consumer-facing applications. So they're both protocol and consumer-facing application. You get into like regulatory issues and how it all operates, and it's all fine and nitty gritty. But yeah, I do think once that happens and it's more mainstream, then these protocols that win their categories, like NFT lending, will be a massive category eventually, with not just high value profile pictures going through, but physical, real world physical assets being minted as NFTs, financial NFTs. Not just these monkey pictures and art type stuff.
Yeah, a question that I have, and as I understand it, you're you're funded in the eight-figure range, if my number of figures I can count them correctly, which is like a lot for a startup, but not necessarily a ton for like a lender. And the primary driver, as I understand it, is kind of peer-to-peer loans. Like someone posts they want to get a loan for 1,000 ETH on two Mega Mutants. Someone else sees that and says, yes, like at 18%, I'm willing to do a 50% loan to value ratio. Would you ever entertain the idea? Let's say a hedge fund called you up tomorrow and was like, Gabe, what I'd like you to do is I'd like you to do a lot of in-house lending. I'll hit you with $250 million in liquidity. Like, what's your IRR that you think you could get on that? Like, do you ever see that being a position that you take your company where you're doing the loans primarily in-house, or do you see it more going in a direction of peer-to-peer?
Yeah, also a very good question. I think right now we're just focused on shipping and building the best NFT lending marketplace. That's our niche, and we want to own that category. I do think it's a natural fit for us to think about being principal lenders on the platform, sort of like market making on our own platform to bootstrap liquidity and activity. And we thought that was going to need to be the case for a while. But we saw that there's a lot more lender demand. We have a huge lender network that's interested in making these loans. And so the thought behind being lenders ourselves is maybe, hey, let's bootstrap the market, and then other lenders will come in. But we're actually seeing a lot of lending demand. So right now we're just focused on building the protocol and enabling that liquidity to take place on its own. But yeah, I do see a world where, because we have a lot of the data and alpha that we ingest from the protocol and data that we're putting on the DApp for counterparties, we can use that data around to make loans. And so that is something we've talked about also.
Nice. No, I mean, I think that's interesting. I think, one of the things that I firmly believe in the NFT ecosystem, and Blake, I saw you had your hand up. Go ahead, man. I saw you had your hand up. What's your thought?
No, it was kind of convenient. You actually had kind of touched on it, but Gabe, when you were mentioning institutional capital being interested, do you have an idea? Like, is there kind of larger outside money, putting up capital for these loans, or is it mainly peer to peer, like NFT native consumers doing it? Like, are you able to get that kind of data?
Yeah, I mean, it's a little bit of both. It's peer to peer. So like we have people popping in our Discord and say, "Hey, I have these assets. Like, any lenders in here?" Or lenders will come in and say, "Hey, I have ETH or USDC. Like, I'm lending against all blue chips." So there is organic market activity happening for sure. Um, but it's, for the most part, it's such a new market. It's like it's all very very niche and new.
So one of the things that I see is I think that in retrospect, 20, 30 years from now, we're going to look back at the 15 years between, call it, 2000 and 2015, where the internet was prevalent, but there wasn't ownership, except for institutional companies owning everything. I think people will look back on that and be like, that was weird, and they should have had ownership right from the start. So my general perception is that all ownership online will go through NFTs. They won't be called NFTs any more than we call a company with a website, or a tech company. Like every company has a website, right? I think all ownership will end up going through NFTs. And I think NFTs will end up being like this multi-trillion-dollar industry that ends up usurping the value of like the S&P 500. This is like a crazy thing to talk about because the NFT market right now might be worth maybe $100 billion or something. It's not a super valuable market. But I almost think there's like a layer of being like a Veblen good or a Veblen market in this place, where the market is still too small for institutional capital to come in. And like for a normal person, spending 10,000 or $1 million is an insane amount of money to be spending. But for a institution to spend $10 billion as a pension fund might be very normal. You can't put $10 billion into the NFT space. I think, I'm looking at A16Z and they've got a $7 billion fund, and they are, I feel like watching A16Z. I think it's very challenging to implement, effectively $7 billion of capital into the NFT ecosystem. Jesse, what's up, man? Good to have you up on stage. Love to hear your thoughts and questions.
Hey, how's it going? Yeah, no, I still continue to struggle with the same issue here, which is, if this is truly, a technological revolution, you're really typically looking at like a 50-year time frame, if whatever it is, 20 or at least 20-year time frame, and it's very healthy. But like bubbles are actually great for revolutionary technologies. They're just not great for they're not great for the individual investors in that bubble, but that's how you build out the infrastructure, right? You can't have, we've talked about this a million examples. You can invent Uber, but Uber doesn't matter until everybody has a magic computer in their hand, or the internet doesn't happen until there's enough capital to lay wires below the ocean. So the bubble's great. The only problem is how do you invest in a bubble, and that's where we are now. And so I just think there's it's just tough. I think there's still going to be a lot of tension around, for example, I think we all believe in gaming, but gaming is so like balkanized between all these different chains. I think we all think it probably needs to have a side chain or an L2, and it's almost like all these L2s are almost like their own. There's just more friction. It's hard enough to get somebody to get a MetaMask, let alone figure out what a bridge is. And all these L2s are basically like, you can imagine like one L2 is like PlayStation, another Sony. They're only partly compatible. And I just think that's such a mess right now, in terms of onboarding the next generation of users. I just think there's going to be a lot of tension, because I think in order to onboard more people, you're going to have some sort of centralization. You need some sort of centralized kind of partner there who builds this out, who guarantees it. I think it's great to have this idea of decentralized. I just think there's so much tension there between the core people who think decentralization is necessary and the people who are onboarded and who are going to be like, I think everybody thinks of decentralized. Oh, it's amazing. Let's do fantasy football, and right, you'll always have your assets, and you'll do this on the blockchain, you'll do that on the blockchain. But people never think about, okay, you do that, and then what happens when your wallet gets hacked or something happens? It's like all that stuff that you said was so great, that is ownership tied to your own wallet, is now like gone. So that fantasy football that was supposed to last your whole year, so now the league, like now like whatever it is, Deshaun Watkins now, like he disappears from your wallet forever, and now he's not part of your fantasy
take it a step
football league.
further.
So it's such a challenge.
Take it a step further and assume that your primary domicile goes on chain, right? Like it would make sense to put, and I don't think this will happen in the near future, but I think in 50 years, all of the real estate will be on chain. It won't be at the local municipality. You'll have real estate, whether it's your mineral rights, your land rights, your air rights, will all be on chain of ownership, liens against the home, contractor, like everything that goes into real estate will be on chain. But imagine if that wasn't centralized and you're like, you're sitting down at dinner with your wife and like in your house, you're like, well, like I got some bad news, honey. I clicked on a bad link, and now Buggy123 owns our home. We're gonna have to move out next week. Like, I mean, there's a lot of asinine stuff where the reality is decentralization from a layer of censorship resistance has merit, in my opinion, in like Bitcoin. Because Bitcoin, if you're in a war torn country, there's a very clear price for Bitcoin, and you could go from Venezuela or Ukraine to a safe country and take your Bitcoin with your seed phrase. That makes sense. And even if you didn't go through a centralized exchange, you could probably fairly easily, at some level, find somebody that would be willing to do you a trade on Bitcoin. Maybe you take a 5 or 10% haircut on it, but you could do a trade. NFTs aren't like that. It would be very, very challenging if I had a bored ape to like randomly walk around in a new country that I don't speak the language and find somebody that also had a bored ape without a marketplace. And bored ape would be the easiest. If I had some obscure NFT, like even like my Ranga, which I hold, like I think I'd have a really hard time trying to find somebody without OpenSea to buy a Ranga, or without OpenSea or LooksRare or X2Y2 or whatever. Like you actually need two-sided marketplaces and centralization to have a good market. That's what people don't realize. The other thing that's really interesting is like the NFT ecosystem is insanely centralized, right? Like Yuga Labs is functionally, in a way, almost like a index fund of NFTs. They control like 3 or 4 of the top 5 NFTs by sales volume. When you look at the top 10, the percentage of the top 10 NFTs that have an investment from A16Z is like disproportionately high. So I mean, like, I don't think decentralization is really that important for NFTs. In fact, like if you gave me an option of I could have all my stuff decentralized or I could have it all centralized, I probably pick centralized, especially as the demographics get older. Like the one thing that people never or rarely talk about with decentralization is like, okay, cool. You've got these keys, you've got your coins, you got the. Like, how do you pass this on to like your 3 kids? Like, it gets to be a very challenging issue where, if I have a Charles Schwab account, I know who, like, how it goes to my heirs. If I have something hidden under my shoe, it gets a little bit more complex and almost, if my very smart but child that I want to get nothing finds it first, they may run off with all $150 of Bitcoin that I have on there. They might be able to buy themselves a new pair of shoes. So that's something to think about. I do want to open the stage up. Anyone that has any questions for Gabe or just any questions in general, I'm going to bring a few people up. Let's see here. We have we have Wally D. Wally D, what's going on?
Hey man, how's it going, Josh?
Good. How are
Yeah,
you?
pretty great, man. Thanks for letting me on. It's pretty great to hear everyone talk. It's a very interesting topic that I'm very close to.
Cool. What questions or comments do you have?
Yeah, I mean, I inboxed you something and I quoted on it on the first part when you were talking about the Yuga Lab structure. Kobe actually spent like a whole week talking about this, but I'm not gonna go back in the conversation. But check it out when you have some time.
I actually did look at that.
Yeah.
I took a quick glance at it, and we can go back to that. What are your thoughts on the structure of Yuga Labs?
Well, I honestly, I've been part of this. Just to give you a very quick background, I've been part of the space for many years. This is just a new account that I have. I have another Anon account. I've been building a really cool project over the past 3 years.
So absolutely no shilling. You can't talk about your
Yeah,
project.
I'm not, I'm
Just
not, I'm not,
okay.
I'm not.
Okay,
Yeah,
cool.
yeah. I'm just giving context to tell you that I was actually part of the early community of the Bored Ape, and I never minted because I kind of felt there was something off about it. And well, that's just my opinion. I mean, I really like their community. A lot of my friends own like a ton of them. Some of them are very big whales there. But there's a huge problem with the space in itself in terms of kind of like what you're talking about in terms of centralization. And I kind of disagree with the point that we need some level of centralization in order to onboard the next wave of like people, because looking at what's happening with some of the top teams and builders, I'm just saying that I'm associated with a lot of them. A lot of the stack in Web3 is starting to become completely decentralized. A lot of builders have solved everything from RPCs to anything in
When
between.
you say centralized, what do you mean? Because I see Web3 as probably the most centralized ecosystem that
Well,
I am aware
well,
of.
you have to look at it from two different angles, right? There's the siloed liquidity problem, which is kind of like a big issue on Ethereum. And in DeFi, we saw like a circle jerking between VCs taking institutional money and then using DeFi founders in order to kind of like extract that value again from each other. And so that was kind of a game they were playing. But then a lot of other people realized that this is the game that's happening. And then I think what's kind of evolving right now is the stack in itself. So if you look at the stack and if you break it down, yes, there are a lot of elements that are centralized. So basically, the way MetaMask uses Infura, and then the whole point of like how the whole thing works, that is already something for the end user that is a bit more complex and centralized. But it doesn't mean that it's going to stay this way. The progressive decentralization nature has always been something that I'm really interested in the space, and I'm seeing a lot of the same teams creating other solutions in order to completely create, a full decentralized stack and solve most of the UX issues, because I'm one of those people working on it. So I think the
So
next wave will have more abstraction layers that will really help users access all of the liquidity and all of the marketplaces in a more robust way that solves kind of the issue of not being able to play Legos, as someone else mentioned. I think it was Gabe, and that was the whole
well,
promise of like whatever the actual metaverse.
so I don't think that we're going to see layers of decentralization. I respect where you're coming from. You obviously have a good background, but I think that by pure nature, a good marketplace is a centralization of things. If I was in the physical world, if I had a bushel of apples to sell and I went in the middle of a field and was completely decentralized, I might get one person every week that would buy an apple. But if I go to a centralized location in the middle of the city with my bushel of apples, many people will buy, especially if I went to like a bazaar or a market, right? Because the market is a centralization of groups of people. Everyone comes together, centralized. That's what it means, right? So to have a good marketplace, it's a two-sided market. You need to have buyers and sellers. That's always going to be a layer of centralization, whether or not no matter what amalgamation you provide to have a control on this, you can say the controls might be somewhat decentralized, but in most parts, there's still layers of centralization. It's just kind of the layer of opacity around the centralization, right? Like if someone's controlling the code, or if it's a DAO, there's always going to be centralization. And I think, anyways, I don't want to go too far down that path. I do want to move over to Master. Master, how can we help you?
Yeah, hi, Josh. Like my question is more on the identification of the team behind the multi or major players impacting the NFT ecosystem. Like, how much important is this actually?
Well, this is a great question. And just to make sure I have the question correct, how important is it, whoever is behind the metaverse? I think, or whoever is behind Yuga Labs. I think this is the most important thing, right? Like, I believe that if you're just doing ape PFPs, you actually don't need a lot of execution and you don't need a lot of operational consistency, because all you're really doing is letting your community kind of go whatever direction they want. You've given them the IP. Cool. If Jimmy wants to bring out M&Ms, that's awesome. If some random person wants to sell their ape to Kmart or Walmart or Target and it's licensed on there, cool. That part doesn't really require a lot of organizational structure, because mainly the community is moving things forward, and occasionally you need to come up with new art that will fit the culture, like dogs or mutants. But outside of like a few little things, you don't need to do a whole lot technologically to be advanced. And like a good example is there was that like clicky video game that they put out on Apple iOS. It got put out, it got delayed because it didn't meet the requirements. It came out a little bit later. It wasn't really like a technologically advanced game. It was just a mobile game that is kind of I'm guessing that game isn't well played today, or wouldn't be played without the prizes, or wouldn't be played if it wasn't an ape game, right? So technologically, up until this point, you don't really need much. If you nailed it perfectly with the art, which it seems that Yuga or Bored Ape did, and you nailed it perfectly with like kind of lightning in a bottle, you got Pranksy early, you got Jimmy early, you got a lot of these like really thoughtful influencers embodying your brand. I don't think you need much organization or structure. I think you kind of got this insanely awesome community that's driving the ball forward. That all changes when you make a shift from the idea of the community leading the way to the idea of the team building an entire technological, not iteration, but disruption. Um, Here's where I think it gets really important. You need to have vision and storytelling that is more than just mystery and a few words and let people think about but you need execution in a timely manner. So when I look at their team and their pitch deck, and you have one of their co-founders is CTO, but that CTO isn't the person building out the technology that's going to be the main, revenue driver for the company, that's a challenge, right? When you have a company that's only 2 years old, but you start having like 10 different people that are leading 10 different initiatives, it becomes a lot of cooks in the kitchen, right? Like if I had a kitchen, normally I want one head chef that's making the recipe for the soup, right? If I have a company, normally I want one or two, maybe three people that are kind of in charge of, and in this situation, let's say the four founders, four people that are in charge of the vision for it. But here, you've got these like you've got fragmentation that from the outside gives me pause for concern. And my pause comes from, all right, Herman, the CEO of Improbable, is in charge of the other side. So if tomorrow Improbable said fuck other side, I'm out. I don't know if Yuga has all of the tech stuff in house where they can handle it, right? So like immediately you get this layer of execution risk that also coincides with Herman's time. What's Herman up to? Well, Herman wrote a book. Herman read the Audible version of his book. Herman runs a company that's like 1,000 people. Herman isn't the CTO of other side. So the question then becomes, how much of Herman and Improbable's time is being allocated to the other side? Well, I assume they have other projects in the works, and I'm fairly certain they do. So not all of it. Some of it's to his book, some of it's to other sides, some of it's to other companies. So now you end up with, kind of a layer of fragmentation there. And then, I look at you've like Ape DAO, and that's kind of a weird amalgamation of people that are like rock stars in investing. And then you also have like a lot of these Ape DAO proposals, and I've gone through and read them and sat on some of the open calls and talked with other players. And the challenge becomes, how do you go from ideation or an idea or a picture or a concept into a game? And that's the thing that I think people are underestimating. And I know when I invested really heavy in the other side at the land drop, I thought they were much, much farther along. And I thought that because they partnered with Improbable, there was a game that had islands on it that Improbable had worked on several years ago. And my general thought was that a reskin of that game would be possible to be implemented and live in under 12 months. And that in that time period, you would have all of these exciting drip reveals, because there's so much that you could reveal about the other side. Um, in reality, since the other side's dropped, we have a video that came out. It's a beautiful video, but we still don't know what Coda does. We still don't know what the land does. We still don't know what the resources do. And so, there's two scenarios that I can play out. One is that Yuga is this like super genius company. They're thinking 10 steps ahead. I'm only able to see one or two. I'm just a pleb. I'm just a person in the audience. And I'm just kind of looking at things, but I don't know all the information. That's very possible, and they could have this like amazing announcement coming out tomorrow or later today or next month that is going to rocket ship everyone forward. The other option is that they don't have a full plan fleshed out and they're kind of building as they go. And despite a large amount of capital, they're still just an early stage company and trying to figure it out. If it's the latter, I think that it's going to require some restructuring. I think that you're going to need to have clear lines of reporting to scale from what they say is like 70 people to go all the way up to 700 or 500 people. Also, one of the things is like that makes me have a little bit of pause is they're hiring for a head of social media. Well, that to me indicates that the current path isn't the future path, right? So, all right, like that's not in my article, but yeah, that's out there too. So, anyways, those are my thoughts. I do want to go to Jesse after here. He's been patiently waiting with his hand up. I will say, for anyone listening, I have pinned the tweet to the top where I wrote a small report on the structure of Yuga. If you are enjoying the space, I would love it if you would be a subscriber to my newsletter. Just started it last month, pretty new, not a lot of people. So showing my own newsletter here. But if you're enjoying this, I'd really appreciate having you as a subscriber. But Jesse, what are your thoughts?
Yeah, I mean, this ties together. I was going to pose this as a question. Now it all ties together, which is because we had the Azerbala drama this week, and then it ties in also with Ape DAO. I think there's two separate things with this whole issue of an NFT space. The community has a voice, which I think is arguably catastrophic on a lot of levels for a lot of different projects. There's two different ones. One is like you're like a tech company and you have to run your company, right? Every single company that you've ever thought was great was usually like one or two people. It was their vision. They had to cut through the nonsense. And if they went to their community, if Phil Knight or, Steve Jobs, were to have a community vote for everything they did, it's like literally the opposite of building in public. In public, like they would have, rather gone to their grave than build in public. And then same thing with art. I think we have the same kind of problem, which is, so you have this Azerbala thing. I think we agree the Azerbala art was pretty bad. It's probably good it got leaked. It'll get fixed. But I don't know. Like wisdom of the crowd is great if you have to like guess how many jelly beans are in a bottle, then it's great, right? Wisdom of the crowd is great. I'm not sure it's great for building out a creative vision. And this idea, I don't know that you get, J.K. Rowling, if she were to go to, have a community vote, if you get the same product, right? It's usually just one really great visionary who's like, no, actually, this seems this may not seem popular at the time, but, let me see it out.
I agree with you. You need someone with a contrarian vision that people think is impossible, right? Like that's kind of the thing that, to paraphrase Steve Jobs, like the people that are crazy enough to think that they can change the world are normally the ones who actually do, right?
So the tension there is that like the communities basically demand having a voice, right? So we end up with you have Parliament, you have Ape DAO, you have all these community. Every project has like a community thing, and I think it's kind of like paying lip service, because I think if you vote to the community, you might get a Friends, kind of product, like a little bit of average of everything. You're not going to get like, I don't know, Severance is a show that you're not going to get like the next visionary thing. So there's just like, it's really interesting, I think, because I think it's, I kind of sympathize with the people that are like, yeah, we spent like, $5,000. We're invested. We're in the Discord every day. We kind of want to say with what's going on with, I just don't know what the historical precedent is for a successful company that's like constantly having to like, take a group vote every month on like what's the next step, whether it's the direction of the company or just like how the IP is built. It's just, yeah, I mean, I don't even have really a point. I just think it's a really interesting cross section right now.
Right, Gabe, I'd love to hear your thoughts. And you're a CEO of a company, you're running a venture-backed shop. What's your thoughts on the importance of internal, like industrial organizational structure? What's your thoughts on that in Bored Ape Yacht Club?
Yeah, I mean, speaking from my own experience, I think DAOs struggle to be really efficient. I think when you have teams that are a little bit more hierarchical and you have leaders on a team, it's easier to build sort of a product and get it to market fastest. I think with progressive decentralization, I think we have tools that are making it easier for DAOs and people to coordinate around, engineering sprints and efforts. But I do think there's some level of centralization that's needed today to coordinate to be able to ship fast and build a great product. But that could change in the future once there's more, better DAO tooling and things like that. Yeah.
Do you feel confident in the current structure with Yuga? Is it not on your radar? And also, you can take a pass here because I realize that the integrity of your company might depend on playing nice with big players. And me sitting here and objectively talking a little shit or raising questions may not be appropriate. So if you just want to take a pass on any of this, like I respect that. I don't have to kind of pull punches for a political reason. I don't work for anybody. No one's hiring me either. So if you don't want to answer anything, always feel comfortable to take a pass because I realize it's a cross section, but doing my research on your company, on your organization, it feels like you are very hands-on. We spoke privately, just kind of getting in the weeds. You're great at kind of closing those sales. I get the ethos, right? Like you have like a clear pipeline. The buttons are placed in a thoughtful place on Arcade. Like anyone in the audience listening, go check out arcade.xyz. Not at all to use it. This is not sponsored. I've not been paid anything, but it's good UI and UX. You don't have to do a loan or anything like that. But like it just kind of got the buttons in the right place. You go on the website, it makes me feel confident Gabe is not going to abscond with your money because he's good at like UI and probably won't do that. But the investors in the space are what make me confident in a real level. But I think it's a good example of, from our private conversations, like I know you're kind of in the weeds on stuff. How do you see that balance as a CEO from being in the weeds to kind of big picture vision? And then, would you picture yourself having a complex corporate structure in the near future? Or you think that's more Series C, more Series D?
Yeah, well, first, I mean, I think I'm super lucky to have a really good co-founder and a team of some people that I can trust and that I'm really close with. I've worked with in the past. So when you have guys you can trust and a co-founder that you can rely on, it makes things a lot easier to do what's needed to get done. So yeah, I think I spent a lot of time, as a CEO, I'm more kind of sales focused, deal focused, and I spend a lot of time there. But at the same time, you need to keep tabs on it's I always think of it like playing the orchestra. Like you're not good at one thing. You're sort of this general purpose person fitting in wherever you need to get stuff done, but you kind of have to have tabs on everything that's happening. So if you have a team that you can trust to ship things and execute with the ownership that you do, like that you have, I think it makes things a lot easier.
Awesome. I see we've got Lucky Rabbit is up on stage. Always enjoy the perspective. What are your thoughts this week?
Hey, thank you so much for having me on, Josh. What's up to Blake and Kayla? I just wanted to kind of contribute on the thinking of this conversation, which I think is really interesting to me personally. In my personal opinion, I think that when you're in this space of NFTs, we're like betting on visionaries. Like we're betting on the future J.K. Rowlings and Kanye's and whoever's going to come up with something dope. And I think that when we place this like classic investor perspective on, which to be quite honest, Josh, up until like I ever found out about your spaces, I never particularly enjoyed that kind of talk. I always found it to be kind of dry. Like, yeah, I'll watch CNBC and all that from time to time. But when it's like in this kind of market, like we have this opportunity to just like bet on long shots and moon shots and not really constrain them too much. But I'll play devil's advocate on my own opinion there. Like the converse side of that is like with the yugas of the world, you get to a point where there's so many moving parts in a project, and as engineers say, like the more moving parts, the more points for failure. So the only way to sustain and grow from there is really to have like organized structure and have experts who are just like they are like, and quite often they're former military, like they are trained in logistics and moving people, moving products, moving services. And yeah, and I'll finish with this thought on decentralization and centralization. In the late 1800s in the United States, the dairy industry was not an industry. It was just people selling you bottles of milk that were often filled with formaldehyde and all sorts of disgusting liquids that I won't even go to detail on. And literally, it took like kids dying for the government to step in and say, okay, we need to have a centralized organization that oversees milk, tests it, make sure it's safe, so we don't have like our citizens dying. So, I mean, history has shown like time and time again, like, human beings cannot completely be left to their own devices, unmanaged and unsupervised. But I do think that this culture of decentralization feels like a lot of good opportunities for more oversight and like public involvement.
No, I think that's a lot of great points in there. And, the first point I want to touch on, because you got a lot in there, is quality control, right? Or quality assurance, QA. And when you have no level of quality assurance, your brand is typically going to be known by like the worst actor and the worst action, right? Like we're looking at like 120, 140 years later, and you and I are still having a conversation about the piece of shit that put formaldehyde in like little kids' milk, right? Like, and the reality of that is like that's just human nature. There are bad actors in almost every ecosystem, and you put guardrails on it to keep honest people honest. So I mean, I think that's a big thing to take a look at. It's always been my concern with decentralization of IP, right? Like there's a lot of concerns I have with Bored Ape giving IP to everybody, but one of the things is kind of the Walmarts and things of that nature. I also think at some levels with decentralization, I always kind of go back to. I know there's a lot of vapes and weed that come, or like cannabis that have Bored Ape branding. And for those not aware, I've got a law degree. It's something I spent like 150 grand on, and it's in a storage locker somewhere. I've never used it, but looking at litigation historically, I've kind of learned a little bit about it. And you had a Joe Camel issue where there was a cartoon picture of a camel that smoked cigarettes, and you ended up having a lot of lawsuits, and Joe Camel had to go away because it was encouraging children at some level, from the perception of the jury, to smoke cigarettes, which probably wasn't entirely inaccurate. If you look at when people first start having their first cigarette, most people don't start at 42. It's normally a much earlier phasing in. So with that being an issue, it naturally kind of brings my mind to like, if you have no quality assurance on these things, and all of a sudden you get, some legal intervention where they're saying, Joe Camel is not okay for cigarettes. Maybe that looks similar for Bored Apes on vapes. Maybe that never happens. Maybe it just doesn't. But like, there's a lot of questions of a murky area that come up for me with those type of issues. And I think that I think that we're so early into the space that people aren't paying attention yet. We're all in this echo chamber. We've got whatever 160 people in here right now that are listening and very nuanced on NFTs. But the reality is, I don't know, there might be 100,000 people in the world that are active on NFTs. And, when you think about how small that number is, I always go back to the Travis Scott concert that was played on Fortnite. And that concert had 42 million people that were playing Fortnite live at one time. So, I mean, just thinking about that, that's 420 times more people attended that concert than are active in the NFT ecosystem. So like, I tend to think there's an insane amount of room for growth. But I think that we will grow. But I think that as you grow as an industry, you're going to engage growing pains. And it just happens to be this like weird ecosystem of Bored Apes caught fire. I love a lot of things about Bored Apes. I love a lot of things about the Yuga team. They clearly have done an enormous amount for moving the ball forward with things. But I also think they've, there's a situation where, for lack of a better term, what got us to here won't get us to the next phases of things. And I think that, it's almost like how Travis Scott got us to Uber hitting an IPO, but then the public didn't really like how aggressive he was, even though his levels of aggression were 100% necessary for Uber to be as successful as it is. Like, you couldn't have someone play by the rules and build Uber. You probably couldn't have had somebody have like this deep corporate background and create like a decentralized Bored Ape type thing. But at this level, now that Bored Apes are a $4 billion company, they're no longer the underdog, right? Like, and when you're no longer the underdog, you kind of have to play by a different set of rules when you end up being the 800-pound gorilla in the room. Let me see here. I think we have a few other speakers that might want to come up. I think Dario has a hand up. Dario, how can we help you? Dario, are you there?
Hey, what's up, everyone? What's up, Josh? GM.
GM, how can we help you? What are you thinking about?
Yeah, no, I literally heard you say what I've been screaming at people for a bit, which is, hey, the thing that gets us here won't be what brings us to the promised land, right? Like the hype of Bored Ape and of some of these big projects, like people keep kind of catering their projects towards the demographic and the audience that's here right now. And I don't see most projects pivoting towards the masses. I think Bored Ape is starting to do that, right? Like, and there was a little bit of backlash when it came to that the community hires that they put. But I think that even if you look at the people that they put in their as like the face of their project, their company, I think they're starting to look at the masses, right? They're starting to look at the Instagrams and the Facebooks of the folks who are going to be connecting wallets there, and they're saying, hey, we need to prepare for them. And if you're stuck on like this, what we say our degen plays, right? Like this degen audience, that's not going to get us to where we need to be, right? And I think that I'm glad that people are starting to talk about that, because mass adoption requires us to not be in that bubble, like you said, and to think about like real life uses, and think about like that person who would never in a million years talk about, like, think about buying a monkey JPEG. How would you integrate them into the Web3 ecosystem? How would you, like, what would bring them into it? So I'm glad this conversation is being had.
Thank you. I really appreciate that, and I think that from my perspective, that's the biggest thing. Is so many people get into this mindset of believing that like a successful company that was successful for a year or two is going to be successful into perpetuity, and the reality is companies rise and fall. This has nothing to do with a shot at Bored Ape or a positive for Bored Ape, but the only thing that is constant in life is change. And so I think that's a really important thing. Wally D, I see you got your hand up. What were you thinking?
Yeah, man. It's a really, really interesting conversation. I just want to add something, just on Yuga as well. I mean, as they started, like you guys were saying, they started out with something, and now that they're like this massive kind of like company within the space, I think it kind of all boils down to founder mentality, right? And the way they build their community, the way they rally their community. But I see a mistake with like first time or second time founders, and it's very, very quite common in the tech space. Is, are you building for users or with users, right? Like, are you actually listening to what your users' needs are, or are you just building what you think they need? And I think there's a very fine line between those two, and that kind of like boils down to if a big tech company will survive in the future, other than obviously becoming like a huge corporation like the Googles of the world or whatever. I have two more points very quickly, Josh, if I may, and that's
Well,
it for this conversation.
pick one. Pick one point because it's a lot to wrap it in here. Pick one point. But go
Yeah,
ahead.
so the reason why I'm saying that is because, like, this whole space is built on this huge experimental approach, right? Where the community is at the center, the community is the moat, right? And that's why, if we take Yuga as an example, that's why I feel like they shouldn't be at least at the forefront of it all, because they don't really represent the core ethos of decentralization or of crypto or of anything. They're just creating their own spin-off, which is fine, but I don't feel they're the ones, or anyone or any team similar to them are going to onboard the masses, because we still haven't solved the basic infrastructure for even settlement in a credibly neutral manner that's permissionless and totally kind of like how do you say? Yeah, just that basically.
Well, look, I really appreciate that points, Wally D. This is a good perspective from you. And we obviously see things different from a decentralization standpoint. Being said, I did want to bring up an issue that's recently been a topic of hot debate. For those people not familiar with 10KTF, I've been a longtime fan of 10KTF. I still am a longtime fan of 10KTF. That being said, a few days ago, I put out a tweet that said that after they already raised about $10 million for these crates, they created a reward for their most loyal fans, which that reward was the ability to spend another like $800 and buy another NFT. My general thoughts on that, which I wrote in a tweet, are that it doesn't feel extremely egregious to me, but I think the team needs to be a little bit careful with how frequently they are going to be asking for a spend from the community. And specifically, from my perspective, those people not aware, I'm probably one of the top 10, top 20 largest investors in the ecosystem. I'm a huge believer in Michael Figge, huge believer in Beeple, but at the same time, no one ever wants to feel like they're a cash cow that you're just kind of paying into the ecosystem. And so to me, the idea of a reward, and maybe I'm wrong, and maybe this ends up being worth like 100 ETH and it's the best buy you can make. And to be fair, I'll probably buy it. But I didn't feel super good about being asked to spend more money again when the money I had just spent on the combat crates is probably down on an average net expected value about 40% is kind of where I see it being. Jamal, I think you're up next.
Hey, Josh, I just heard you on the 10KTF point. I just thought it was important to point out that this latest drop isn't just an NFT. There's actual physical item, like a physical mirror / screen thing that holders will receive and be able to, I guess, show other digital images or NFTs on at their home or desk or wherever they put it. So it may or may not be worth the 0.75 ETH that you're asking, but I think I just wanted to make sure that you and the audience has a full picture.
Yeah, and by the way, I apologize. I'm really bad at saying everyone's name. It wasn't meant at all like disrespectful. Just I fuck up everyone's name, so I probably mispronounced yours as well. It's a great point, and to me, this is kind of like where I get into the real world thoughts of 0.75 ETH. Like we're looking at like whatever it is, $1,000, $800. I could go buy an awesome display on my own. I could go buy a 65-inch TV. There's like a lot of things that I could buy for that. One of the things that happened earlier today, for those not familiar, is the 10K TF community, which I am a part of. I respect the community, wasn't super duper thrilled with my post, and there's been kind of a lot of back and forth. And I think that that's really important. I think that it's really important to have intelligent perspectives on both sides of this equation. This is how I feel as one data point. That's why I sent the tweet out, is because that's genuinely what I feel. I feel like I'm being pushed a little bit. It's not about the money, but it's really just kind of about how emotionally it feels like, yes, there's an NFT and a physical display, but the way it was teamed up is it was only for the most supportive of holders. You had to have 10 badges, which means you had to have basically participated for about 10 weeks in this kind of process. I wish it would have just been an open store. If you want to buy this thing, cool, buy it. I don't like, personally, I don't love the idea of a quote reward that my reward is spending more money. Like I don't love that feel, but I do see that we have JBS Loan or JB Sloan. How can we help you?
Hey, I'm one of those guys from the 10KTF community that pushed back on that tweet. The key part of the equation that you're not mentioning is that at the same time they're putting these out there, they're giving away about 170,000 ape coins to their community. So in reality, they're only asking for a difference of around $300,000. And personally, I could use some of my ApeCoin and buy this collectible, still have a lot left over from my participation in the community. And it's a personal choice whether you want to do that. I probably won't do it because I don't want the physical collectible. But for those people that do, they can choose to take that reward and put it back into the ecosystem. It was the same way with the combat crates. Even a larger amount was given out at the time of the combat crates, and at that point, people wanted more points. They wanted to participate, and so a lot of them chose to put that money right back in. And I think it's a great way to give people a chance to opt out if they want to opt out, take their rewards that the community is given and turn it into whatever they want, fiat even, or they can pile it back in and participate more in the community. And this gives the WeNew, the 10KTF company, a way to show that they're actually making revenue. So when they go out to investors, they've got a profit loss statement that looks beneficial, allows them to raise more money, grow as a company, and bring in more brands to the ecosystem.
So first and foremost, I want to say thank you for coming up. It's always a challenge to come up onto someone else's stage and say, I disagree with you. So I respect that, and I appreciate the way that you've addressed it. It's been very mature. From my perspective, when I give the number of down 40%, that actually includes the amount of ape that was redistributed back. And maybe my number's off. Maybe it's like 37% or something like that. And maybe I'm just a bad investor and bought in at like a bad time. But for me, the entire premise of buying the combat crates and buying the other things, it was always, and look, I don't come at this from a terribly emotional perspective. I just come at it from an investor perspective. I factored in some level of point scenario in my thought process around purchasing these NFTs. So if I had known that like one of the main rewards that I would get for buying 30 NFTs, was going to be the opportunity to buy more NFTs, I probably would have been less likely to buy as much as I did. And you're absolutely right. The ape coin was distributed, but the entire time when I'm looking at this equation, I'm sitting with like Excel charts and hypothesizing, well, New Tokyo dollars translates at about like 80-1 into ape coin. Here's how much money I think I'm going to get. And Kayla, I see you've got your hand up, and then I want to move back to Jamal. Or Jamal, if I'm mispronouncing your name, please let me know. Happy to pronounce it the correct way. I don't mean any disrespect on that.
Yeah, Josh, I think just kind of hearing the conversation, I'm not personally in 10KTF. I say this is going to be a running joke every week on these spaces, but I need to get in and start better understanding the story and what's going on there. But I think just more generally speaking, the practice of, oh, you're so special that you get to spend more money with us. It's just like a not great marketing tactic. It works, and clearly it works, especially within NFTs. But I think to your point where you're talking about like, hey, I'm down on these other components of the project or of the ecosystem, and the reward is to make more. I think again, I just am so curious to hear from these companies what is and I know 10KTF is like brilliant storytelling, this, that, and the other. But again, it's just, I feel like it would be a lot more helpful to even just understand, again, from like a business standpoint, cool, what is this part of the project going to contribute towards in terms of like continuing to build? And I love what JB Sloan's comments were on like showing that to showing that P&L statement to investors so that they can raise more. But again, it's all of that raising is like to what end? So these are the thoughts I have. I even as we're kind of doing some research for a project that I'm working on. And I remember talking to some moms who are not like native Web3 folks, and she was like, well, so the simple fact that like you want to make me feel special for signing up to buy your thing is a total turn off. So I think even as we I think again, kind of some of these marketing tactics may have worked very much like during the bull cycle, but as people have like calmed down and they're not as excited about stuff as much anymore, or they're just having a much more level-headed approach to making these purchases, we have to rethink those marketing approaches.
Yeah, and that's kind of my main point is I'm not getting up here and saying fuck 10KTF and they're a piece of shit. Absolutely not. I'm a big supporter. I think they're doing a great job in a lot of stuff. That being said, I I don't like feeling nickeled and dimed. That's my general take. Candidly, cool. I was happy to support the brand, and I think I'm one of the top 10 largest buyers of the combat crates. I could be inaccurate with that, but I've got a bag of them, like a real bag. And I'm more than happy to support Figgy and Beeple and even just supporting to help support the ecosystem. I probably went a little bit heavier than I normally would have gone, which is completely on me, not as an investment, but because I like their level of execution in the ecosystem. And so, again, I think they raised something in the neighborhood of about $11 million there. This new 900-person thing at 200 Ape, it looks like about an additional $800,000. So to me, if I'm being honest, I don't think that this was the appropriate time to ask for that additional 800K. And I didn't love that it was positioned as you're the best of the best. You've spent all this time and energy, week in and week out. I'm like, keep in mind, like, I'm probably spending 30 minutes to an hour having to set up these missions every week, which I enjoy doing, but I put a lot of time and effort into it. And so, to me, as an investor, as a participant, I would love to see a reward just be something that's gifted. It isn't. This really isn't about whether or not the $800 or $1,000 is material thing to me. It's just how it feels emotionally. And yes, I hear the counterpoints, but I do want to pop over to Cal. Uh, Calf money. I do want to pop over to you. I want to go to press, and then I want to hear from Blake.
Thank you for the effort on my name. I have a question that might take us down a different thread. Is that okay, Josh?
I do want to stay a little bit on topic for 10KTF just because I put a tweet into their Discord and I said, hey, we're going to talk about that now. If you want to pause that, I'll get back to you as soon as we're done with the 10KTF.
Yeah, sure thing.
Okay, let's go to press. Press, for anyone that's not familiar, Press is like a mega bull in 10KTF. He's an intelligent person that I respect. I also know that he told me, fuck you, Bobrowski. I don't agree with you. And so we want to hear what he has to say, and I always appreciate it.
I literally, sorry if anyone was waiting to speak. I stepped away from work just to get up here. A couple of counterpoints. So first of all, I don't think 10KTF sees the participants in this ecosystem as investors, because if they did, then every asset in the ecosystem is a security, and everyone should be expecting an ROI. And so I just
So let me give a really quick counter to that. One of Beeple's posts in the Discord chat was everything we do goes back to driving value to our early investors.
Yeah. I mean, I think legally, I don't know who's counseling him, but obviously that's probably not the best statement to make publicly. But either way, my thoughts are, first of all, this is an item that has been teased for about a year. This Kagami, this mirror, and 10KTF, or we knew, they work closely with Looking Glass. And if you look at Looking Glass, they are like a front of the line, high-end physical display company, and their cheapest product is a small display worth $400. So taking in the production costs of what these are and what they mean and what they will mean for the future as one of the first branded physical displays specific for NFTs that comes with a very limited edition dynamic piece of artwork produced by the We Knew Labs design team, which includes Robin Har and Beeple. To me, I think it is a privilege to be able to mint this. I do think it will have long-term value. I don't think or care whether it has utility in the ecosystem that gives me more airdrops. To me, it's a piece of art with a physical display that comes with it. And also, just in general, you don't have to buy it, you don't have to mint any of the stuff that comes out. If you look at the rewards earned just for participating in the ecosystem, with Ape rewards alone, if you extrapolate out for people who participated in all 20 missions with their assets, on average, it's between 30 and 40% annual percent earnings, interest earned on, at least on my initial investments, just on the Ape value alone. Granted, I used my entire allocation to max mint crates, and so I'm in a similar boat as you, where there has been a depreciation in that value. But just in terms of like value given back, the reward was ape. The privilege to mint the Kagami is like totally up to you with like whether you want to use rewards for that or not. I wouldn't see it as like you have to participate in this because it's a piece of art. If you don't want it, just take the ape and offset your cost basis if you're down. Like, no, not financial advice. I'm just saying, like, I'm not too. They're running a business with like a 20-person team. They have salaries, they have hardware to produce. Like, there's expenses to this, and this is part of their business. And I think it's a really thoughtful way to both reward people and give them an opportunity to put money back into the business. And you could bet your ass these are going to get max minted. There will be a ton of demand for them, and people who mint one will probably buy more on secondary. So,
no doubt.
yeah. So,
And
but
the
Josh,
reality.
sorry, I'm gonna step down and rebuttal with responses. I want to answer you. I want to talk here for the next 10 hours about this, but I have to go back to work. But I'm gonna listen and step down. Thank you for having me up.
Press, thank you for stepping out of work. It means a lot to me that you would take the time to do this. And I think you have really good points, right? I know you're stepping down. I think this is a very logical, thoughtful way of looking at it of, hey, this is a piece of art. Hey, these retail for $400. You're getting an NFT. I think all of those are completely accurate. And, my issue isn't at all around the object nature of the price. It's just more around taking the temperature of how people are feeling in the ecosystem at the time. It is something where I will almost always dislike the idea of my reward for being a very good spender is the ability to spend more money. That's my personal perspective that kind of spans across almost anything, right? Like if I sign up for a country club, and I don't belong to a country club, but if I spent $25,000 to join a country club, I'd rather them charge me $35,000 and not have incidental fees that kick up along the way, and you give me something for free in the future, right? Like that's just how I am. I don't mind spending capital. I'll certainly mint my singular one that I got the ability to have. If it looks like a good investment, I'll buy more on secondary, right? Like, so it's not really a question of the value proposition here. Like, I don't dispute that everything 10KTF does is of a high quality, but I do not like the idea of my reward is getting to spend more money. And I think that's something just to be thoughtful of. I want to go to Confucius, who has a hand up, and then I want to go to Blake.
Hi, Josh. So while you're on 10KTF, I just had a question on that. So I've been looking at it for the past 6 months, and a bit like Carla, every week I'm like, I should probably get one of these. But I just wanted to know, would you recommend as the first thing I buy from there, would you recommend a floor one or a Genesis one? Because I think the floor is about 0.32 and Genesis is 0.6. So just wanted to get your thoughts on that.
I love how you say Genesis. It makes me think of aluminium or aluminum. I wish I spoke that way. It just sounds so cool to me when you say it. I don't really know. It's really hard for me to say. I'll never give financial advice. I don't know what you should buy. I do like the ecosystem. For anyone in the 10KTF audience listening, I'm a fan. I'm a big fan. I'm not, this latest thing isn't causing me to dump my bags. I'm not having an angry upset here. I'm going to buy whatever they tell me to buy, like an obedient person. So I don't know, but what I would do is I would encourage you to do your own research, listen to some spaces, look at what's going on in the chat, maybe ask people in the chat, and then form your own opinion on it. A non-answer, and I'm going to go to Blake. I'm going to go back to Sloan, and then we're going to go to Calf Money.
Yeah, Josh. Yeah, I think for me with 10KTF, and I think it's kind of where you're at too. Is it's almost like it was a little, it wasn't done in the right way, right? Like we had talked about, when the other side minute happened, the response to it, from Yuga was, hey, let's start an ape chain. It's kind of the same thing here. It's almost like, and I'd missed the cutoff by like 1 or 2 missions to get the free combat crate. Same thing with this release here. So it's almost like you have to be super, super dedicated to the space and then also be ready to pay. And then in addition to that, it's almost like it's and you may have a different view on it. I'm in 10KTF. I'm in a Genesis piece. I think when it first opened or a couple weeks in, but it almost seems like you have to be able to dedicate hours and hours to 10KTF. And I feel like there's almost a worry of they're maybe diluting too much. In that I had bought like and maybe I missed an announcement or something, but the Gucci cloth, which I think was like maybe a good 4 months ago, maybe longer. And I
Yeah,
don't know of
probably about
anything that
three
came
months
from
ago.
that.
I got like I think I had like 10 pieces from that. That was a good drop. I liked that one a lot.
Yeah, yeah. I mean, it was cool, and obviously, the fact that there's a collaboration there, is awesome. But the Gucci Grail apes have come out. I mean, obviously longer than that, and then they dropped the cloth. It just seems like there's a lot of moving pieces, and I don't want to take a shot at Pixel Vault. I know they kind of get beat down for that, but I'm just worried about maybe too much going on at once and not kind of tying the loose
I'm
ends,
I'm
as they
mega
go along.
bearish on Pixel Vault. I'm mega bearish on them. If it's a very different take for me. I think Pixel Vault. I did a deep dive on them, and a lot of the community didn't appreciate it. But I do want to let JB Sloan rebut you, because JB Sloan has an opinion that is different than mine, and you and I are just going to sit and say we both agree. And I want to hear a divergent perspective. So JB Sloan, go ahead, and then we'll go to Malcaf or Calf's
Yeah,
money.
it actually building a little bit on the point that was just made that 10 KTF has been putting a lot out there, and it is complex, but it's almost a game to play. In most projects, you invest in the project and you're going to win or lose with the project. In 10 KTF, you can invest in the project in different ways, and you're kind of competing with the other people in the project to win within that project. Like, the question about what to buy right now, the answer in 10KTF is almost always buy what nobody's talking about, because the floor is really low on that item. Right now, like combat items are really low, and eventually they'll have their day. Gucci Grail has been the same way. It's been up and down, and there's been points where everyone's down on it, and there's points where everybody's loving it. The Kagami is going to be the next thing, and those are probably going to go real high because everyone's going to be excited about it when it comes out. But that's you gotta play those cycles within this ecosystem, and that gamification of investing, which is really the entire NFT space. We knew in 10KTF is building their own ecosystem where you can still have that gamification but still be within the walls of their environment, which I think is brilliant.
Yeah, I mean, look, they're a smart team, right? Like they, in my opinion, stand out as one of the top 5 NFT teams in the ecosystem. Not that my opinion means fuck all, but I actually really respect them. And this is a very weird thing to come from that a lot of people don't understand. Is I don't spend a lot of time deep diving dog shit projects. I mean, I'll take a project that I don't respect, look at it for 10 minutes, and be like, that's a waste of my effort to look into it. I really like 10KTF. And, I respect people in the community that are listening, are like, fuck Bobrowski, fuck this. He's fudding the space. What's he doing? And I understand that. My perspective is this is a great project. I think this is a misstep, a small misstep. But I think it's a misstep to charge for this at this juncture in the market. Could be wrong, just my opinion. But if this misstep recurred, and okay, next thing is 2 weeks from now, you've got like this big advantage of being 12 badge holders, you get to spend $2,000, and then in another week you get to spend another 3,000. That's kind of the mentality that makes me start to feel less like a supporter of the project and more like I'm a customer of the project. Now, granted, maybe that's the direction they want things to go. Maybe the direction is not having whales like myself, and I'm not really a whale, but not having buyers that hold large bags, but to have people that are participating for the sake of consuming in the same way that I might spend $2,000 on a very fancy show at Hamilton and have no expectations of a financial remuneration in exchange. I do want to go to Kath Money, who's been patiently waiting up on stage.
And again, I might go off topic here. It's okay. I might switch gears from 10KTF. That's okay, Josh?
Absolutely. I think we gave a good 30 minutes.
Yeah. Okay. So actually, this is such a great conversation. I did have like a comment unrelated to my question, and that is that I think that NFT people are actually. I think that we should all be thinking of ourselves as customers, being sold a product, and just as in well, at the same time we're investors though, because it's unlike buying a Rolex. You don't have equity in the company, but you do own something that can accrue value. Not
So I
not
would
everybody.
actually dispute
Go
this
ahead.
just for a singular purpose. Can be a collector and an investor at the same time. Like I buy a
Yeah.
Rolex, I expect a positive ROI on it, but I also appreciate the watch and like to look at it collecting dust, right? I realize I don't own a portion of the company. If a home manufacturer built 100 homes and I purchased one with the intention to flip it, I'm absolutely an investor, but I don't have any equity in the construction company. So I think that buying a consumable is a different thing. Like when I buy an airline ticket, I never think that I'm going to be able to resell that airline ticket. And so what I think is I think we are investors, but we're not equity investors. And that's typically how I think about it. And I believe with very high certainty, the majority of the price action in this space is driven by price speculation. But I'll let
Yeah.
you continue.
Yeah, I pretty much agree. I pretty much agree. So just to get to my main question, it's actually about utility NFTs and the NFTs that you see issued by like the Nifty Portal and Rug Radio and Zeneca stuff. Now, all run by people who seem to have a lot of integrity and have great reputations thus far. But I wanted to ask, like, it's kind of like a game theory question. Like, you're supposed to buy one of these NFTs to get access to an alpha group with people with a lot of information to help you, make the best bets and all that. But when it comes down to it, yes, it's somewhat of a positive sum game because the pie is getting bigger and we could all eat. I hear that. But if we're all speculating on the price of those NFTs go up, then we're expecting for more people to buy them, which wouldn't that kind of invert on itself? Like, wouldn't that lead to less alpha being available if too many people get the utility NFT? Like, do you have any views on that? Like, when
Yeah.
should you ever buy those utility NFTs if it's meant to kind of cave in on itself like that?
So I'll give you my personal experience. Um, I believe, the largest investor in Nifty Alpha. I had about 120 of them, and I was actually on the show for every day for about 6 months. And P.O. Nick, I think they run a good show, and your Captain Kicks runs the good show with them. I think those are the three founders of the project. I bought 120 at like 0.08 all the way up to maybe 0.12, and then I sold them almost all when I felt like the market was too high, and I had a disagreement with the two co-hosts, and I decided it didn't really make sense to continue forward as a part of their program. That being said, I respect them. But so going from one of the largest holders to not, I think you have to just always ask yourself what you're expecting to get, right? So like if I was to buy a proof collective pass, which I don't know what they cost, 40 today, that might be more of an alpha group where I'm looking to get connections. I'm looking to build with other people or invest with other people, and like a really, that's probably what today would be the most exclusive alpha group. If you buy into a pass, whether it's Rug or Zeneca or Nifty, you just have to see what your expectations are, and then like I wouldn't go into this thinking that PO is going to give you some like amazing insight that's going to 100x your money. I would more look at it of whatever the pass costs. I'll just talk about Nifty Pro. It's 0.25 ETH. Do I want to be a part of this community? Do I like the people? Do I want to help support them? Do I think I'll get value from this? Yes, no, maybe. But I think the idea of these alpha groups having like really good alpha is something you got to be careful of. I'm a full-time investor. I I probably have a if you put all of my track record together, you'd probably say I'm reasonably competent as an investor. Not the best, not the worst, but reasonably competent. Um, I always question when somebody gives me information. Why are they giving me that information? And I think that's a really important thing. And like, if I ever give information here, you should fucking question it immediately. Why? Do I believe this? Is it true? Is it false? I'm never providing legal or financial advice, but you always have to ask yourself, like, what are you getting? Like, and you can look at a track record of someone like Farouk and see, like, when he's given, quote, alpha, what's his reason behind it? Sometimes it's good, sometimes it's not. When Beanie gave alpha, there were some projects where he gave alpha, it went great. Some projects gave alpha, it didn't go great. I always just ask myself who's giving alpha and why. And if they're a really deep pocketed individual and something is a great buy at zero point 0.1 Ethereum, why are they not buying 1,000? Right? Like, are they looking to dump? So that would be the big thing I would go to. And Kayla, I see you got your hand up.
Yep, I'm here. Yeah, no, I think I had a really interesting thought around I think it was Calf Moon who said, or Money or whoever it was, about we're customers, not investors. I try to stay away from the term investors, generally speaking, but in terms of the customer component, with the example of the Rolex, I don't know that that's a really good apples to apples comparison, simply because when you purchase your Rolex, you get your Rolex the day that you purchase it, or at the very least, even if it's like on back order or something like that, you order it and it's coming. With a lot of these, with the other side, I have a very expensive piece of other side land with a coda on it, and I don't know. One, I don't know when it's coming, and two, it it is a possibility that it doesn't come back, and in that case, I don't think Yuga is in a position to refund everybody who paid all that money to buy the other side. So we're very much investors from that standpoint, simply because the product is not guaranteed that we're going to get it. And therefore, since it isn't guaranteed, we're also not guaranteed that we get our money back if it doesn't get delivered. So we are participating. Customers, I think the relationship between like a vendor and a customer is that a customer is exposed to very little risk because they can at least get their money back if they're not given what they're promised. Whereas in our situation, we are participating in a much higher degree of risk in this current scenario.
I think this is a really, really solid point, and it's not something that I thought of, but you spoke so intelligently about it. Hey, let's be honest, the other side is using those funds to build their company, right? Proof was open and honest that they were using the money from Moonbirds to build out their mystery company, High Rise. And that is a very big difference, in my opinion, as to when I buy a Rolex, like you said, I know I'm getting a finished Rolex watch. This company has 100 years of history. If it breaks, if it needs a refund, they'll handle it. With other side, I got a JPEG of a piece of land for $20,000, and what does it do? I don't know. We'll find out. But I see we have a new entrant onto the stage, Zoe. I hope I pronounced your name correctly, or maybe it's Zoe. I always mispronounce names, so please don't take offense. How can we help you?
Hey Josh, no, it's Zoe. I was actually coming up because I wanted to also say something about a Rolex explanation, and I don't or comment, and I don't know who said it because I wasn't looking at my screen. Who gave like the comment about it? But I actually think, because Kayla, I think you and Josh said it was maybe a bit different, and I actually do think it's a good example, but maybe looking from a different standpoint when it comes to investments, which is if you get a Rolex, and I was also thinking about a handbag, of course, like if you get a Hermes bag, you do expect it to go up in value. And I think we do the same with NFTs. So when you think about it, if let's say something does happen to the company, to like Rolex or to Hermes brand or whatever, of course we know or think it's not going to happen just like with Yuga. But let's say something happens, they go bankrupt or they get a really bad reputation, does that mean that that asset goes up or down in value? And would it be the same for NFTs? Like if something happens to Yuga, would the ape go up or down in value? I just think it's an interesting thing to think about. So I was looking at that point. Yeah.
Yeah, I think that's a really interesting point, because if you're looking at something that's mainly driven by art, I think the value could go up, right? We see this with artists who pass away. The value of work goes up because no more supply can be produced. Just very simple supply demand equation. So theoretically, if today was the last day Rolex ever made a watch, we could hypothesize that those watches actually might go up in value because you can never buy one again. And there's enough people to kind of support the function of Rolex. There's enough authorized dealers. There's enough watch repair people around, your local region if you live in the United States, to continue to have the full function of the watch. And maybe you just don't have a warranty, but Rolexes don't break that much. I think that part holds pretty true for art and things of that nature. If you're telling me that Other Side and Yuga go out of business tomorrow, and I've got a picture of pretend land that I paid 20 grand for, I think my picture of pretend land is going to go to almost zero, because I'm not paying for the art there. I'm paying for them to build out a game, or a metaverse, or some playable interactive space that resembles a game, right? And so, in that sense, I'm much more in line with an early stage investment. So, to me, that is, that is an issue that I have, where there's this situation at hand that you're looking at an early investor risk portfolio, but if you're in the United States, typically the UCC, Uniform Commercial Code, governs the sale of goods. So if these are just typical consumer goods, I would be more than happy to go get like a refund from Yuga for what I paid, because I'm down 70-80%. But I can't, right? Like, there's no ability for Yuga to refund that. And in fact, Yuga might have been on the line for refunding the gas fees, or maybe not, depending on how things would shake out. You don't get the benefits of being a consumer, but you don't get the benefits of being an investor. And so it's kind of left, and I don't really even know it. Like, I don't think these are kind of, financially regulated investments yet. I think it's unclear, but I do think that we're in a year or two, we're not going to be in the same spot where we've got the worst protections of an investor with the upside of a consumer, which is zero, but don't, like, you get the worst of both worlds. You don't get to participate in the upside if it goes well, and you don't get a refund if it goes badly. Like, that's just a spot of being neither here nor there that I think is sustainable. If you want people to functionally be angel investors and invest in your vision of a company that you're going to build, that you've done nothing on, or that you have an idea of, I think that the remuneration to get people to invest in those is going to have to be, if you're correct in your investment, you have that same 100 or 1,000x upside that you have if you were an angel investor in Uber, Airbnb, or bought Bored Apes really early. I think that's going to be like a situation that comes to play. I do realize that we're a little bit over on time. I do want to say, we're going to give Blake and Kayla an opportunity to wrap the space, but I also want to say thank you to everyone who came out. If you haven't subscribed to my newsletter, please do subscribe. That would mean a lot to me. If you're listening and liked this, it's a way that I distribute content. It's 1 or 2 times a week. I typically do a little bit more long format content production. And you're always welcome to interact with me. My DMs are open. Blake and Kayla, love to hear your recap. And by the way, I also want to say thank you very much to our special guest, Gabe, for coming out today. He runs, an interesting loan platform that, I think is pretty cool in the sense of providing liquidity to an illiquid market. But Blake and Kayla, I'll let you two wrap things up.
Yeah, Josh, a hell of a space, man. I definitely shout out to Gabe and everybody that came up. Usually we run about an hour and a half. We're almost 2.5 hours deep into this space. So, yeah, it was a great space for sure. It's one of those spaces I'll definitely have to go back and listen through again. But definitely appreciate everybody's perspective, and gave me a lot to think about. So I appreciate it. Kayla, how about you?
Yeah, no, thanks, Gabe, for joining us today. I'm not someone who knows much about leverage and all those different things, so I was just sitting quietly and just soaking it all in and learning from a lot of you all. So thanks for bringing that perspective to the space today. And then, of course, we love to get into it with all the marketing and all the ethics of it. And so it's always fun to hang out with y'all every Saturday. So thanks everybody for being here.
Gabe, you want to say anything to close before I wrap?
Nope, all good. Thanks for having me on, Josh. Good to share opinions and talk to everyone.
Awesome. Well, everyone, again, thank you so much for coming out. Is never financial or legal advice. Always do your own research. No one here is a lawyer. No one here is a financial advisor. Certainly not your lawyer or your financial advisor. That being said, if I ever invest in something and you happen to follow any of my wallets, which I don't have public, I'm wrong a lot, and you can see a lot of examples of me being wrong. So if you ever try to copy trade me, you're more likely than not to lose money. So don't do that. And just thank you everyone for coming out. And I really appreciate everyone from 10KTF that came out today that had a contrarian point to what I had to say. I have one perspective on one data point that doesn't make me correct. It's just my opinion and how I feel about that situation. But I respect everyone from the 10KTF community that came up, said divergent perspectives, and shared their side. As an audience member, you can make your own decision. I do like that project very much. And, that's all for the spaces today.